Lucha Ranger here again with his beautiful black tie. Bet you're wondering why. Well, this is his lucky power tie. That's why I wear this tie all the time. I make money with this tie. So today we're going to talk about what the heck is the stock market. And it's one of the most complicated situations to explain because there are so many gears and wheels that run the dadburn thing. And I'm going to try to simplify it as best as I can. So here's what happens. You own a company. You own it free and clear. Let's say your company's worth, $50 million. But you need to raise money. You need to raise some cash. So you do what's called, you issue shares. So you estimate how many shares based on the price of what the value of your company is. So if it's worth $50 million and you want to put 49% of that company into public trading, then you have to decide what per share you're offering. So it's too complicated for numbers, but we're going to make up a number. So let's say you're going to offer 5 million shares at $10 a share. So that would be 50 million, something like that, or 25 million. All right, so you issue the stock, so you stake a certificate. So for every share that a person wants to buy in your company, if they feel that your company is worth it, they will bid and put a price in. And let's say if they want to buy that $25, well, for $25 they buy one share of the company, one share of the total, let's say 5 million shares that are out there. People will buy more. They buy more and more, and then once all the shares are sold, then the cash money that was made by selling those shares will now come to their original owner of the company. He still owns 51% of the company. That's the thing you got to remember. Anybody that wants to do that, you always want to keep control of your company. So what happens is, now all of a sudden, you have to elect a board of trustees. And these people will decide certain things that the company needs that will make it more profitable. So basically, it's like hedging a bet at a horse race. If let's say you've got a pick six and it's going to pay $50,000 and you've got 2 horses in that leg. What you want to do is you want to try to find somebody and say, hey, I'll sell half this ticket to you for, $40,000. So this person invests 40 million or 40,000 or whatever, $40, whatever, and then all of a sudden you have hedged your bet. So yeah, you've lost 40% of it, but that's okay. Now you've actually made money because you originally put 1,000. Now you've got like 35,000 guaranteed in your pocket right now. Well, that's what you do with a stock. Same thing. Everybody, you're selling those shares and you pocket that money and use that money for whatever. But remember, you've got 49% of the people that have bought into your company. Now you have a board and they come up with ideas to improve your company. So everybody bought at $25 a share, but if the company continues to show profit by selling product or manufacturing a product, then the price of those shares will go up. So they become more valuable. So now it becomes $27, maybe $30 over time. And then all of a sudden, you start making money on your original investment. It's just kind of a complicated way of making more money. Well, that's where most all the companies that you see on the stock market, the S&P, Boeing, General Electric, all these companies were once privately owned, but shares were sold to raise capital and cash. A lot of these companies, the owners don't even have 50% anymore. They only have 35% or this or that. But the board still builds the company up. So in short, all those stocks that you see were basically private companies at one time, but now are publicly traded on the New York Stock Exchange or the NASDAQ or whatever. A lot of your AI, Alphabet, all those were all private. Now they raise capital. It's a way to keep economy and money rolling through the big way of the United States and to keep the economy stable. So that'll basically run that. I hope I kind of explained it to you. It's a very complicated thing. If you want to learn more from, Google, whatever, but you just got a little bit of a lesson on simplicity of what the stock market's all about. See you guys later.